Good afternoon, everyone. Today is Dhanteras, and I wish that this day brings good fortune in your life. My name is Abishek Raaman, and the topic of the day is how a trader made a profit of more than 9.5 lakh rupees with a risk of just 32,000 in the stock market. It's a very interesting topic, and I want all of you to take full advantage of this topic today so that you can also change your financial future being in the market. So, starting with the first point, where Mr. Pratik Patel, founder of Niftymillionaire, says trading is not guessing game; it's a game of mindset. And what is the outcome for you from this slide? And that is, if you are having any trouble with your trading outcome or your trading success, the first thing which you should focus here should be if your mindset is correct or not. Generally, what happens when there is any problem with our trading profit strategy, whatever, not strategy, profit and outcome, what we do is we try to find out other people or other strategy, but we never focus on our mindset. And whatever changes you make, but if you're not working on your mindset, even if you get the best strategy, that will not help you to make bigger profit in long-term wealth. In fact, I'm talking about. So moving to next point. So let's quickly see why actually people get involved into this trading, which we also say beautiful financial instrument. Why I say beautiful financial instrument to trading is because this is one segment which is focused, which is actually available to every citizen theoretically or practically also if internet is there. And this in this instrument they can use a small margin to make huge wealth. We have so many examples where, I mean, all these people, Rakesh Junjwala, Warren Buffett, Ramdev Agrawal, who made big fortune with a very small margin. Through other instruments, either it's not easily available to everyone or you require huge amount of investments. So taking a checking what exactly people do trading for, you might be doing it for creating wealth to give a grand celebration to your daughter's marriage, or you want your kids to have world class education, you want to buy your beautiful dream house, you want to buy your dreamy luxury car, or nowadays there is a trend of starting their own startup and venture. So you want to start your own venture and you want to create wealth being in the stock market so that you can comfortably move ahead with your dream venture plan. However, what happens whenever we talk about such goals, creating wealth creation for the to achieve these goals, the biggest problem comes with us that these goals look unreal to us. What exactly, why it looks unreal? In fact, let me tell you, if you have seen 2 to 3 goals out of these goals which I have mentioned here, I'm pretty much sure that looks almost impossible to you. Can I know if all of you have the same kind of dream? If anyone has any different dream, whatever I mentioned here apart from this. Okay, so oh my God, the most of responses I'm getting, those says all of people says I want to big buy house. Okay, there are a few who says yeah I want to buy BMW car. Okay, that's good. That might be one of your dream car. Okay, here I get few entrepreneurs as well. He wants to start his own technology business. That's good. I really appreciate that. So, yeah. So what I was explaining to you that you find that these goals are quite unrealistic, especially using your own money. Oh, so let us do a reality check. We will not talk anything in air. We will do a reality check if it's actually possible. Look, so let's go ahead and see a story of a trader who could actually lead after a few corrections or few mindset changes in his life, and who is on the path of creating wealth to achieve his dream. So this story is of Mr. ABC. Who is ABC? He's a farmer and a well-educated farmer, in fact, and he also has good land parcel available to him. so that he can generate good source of income. Now let me make you understand here that though he is generating good source of income, it does not mean, I don't mean to say that he is creating a huge amount so that he can have good amount for investment purpose. No, that's not the case. So why I'm sharing this story of Mr. ABC with you, that would be clear on next page. So what kind of problems he was facing? What exactly Mr. ABC did, since he was generating a good income, so now he thought, started thinking how he can create wealth in his life. And for that he thought that, okay, internet is available nowadays even to remote areas. So he thought, okay, I can definitely do trading which does not require him to go anywhere. All the education facility is also available online, and everything, all the services related to trading is there online. So he started, and he was facing mainly these two problems because of which he was not able to generate wealth. And these problems are, so what he was doing was, the moment he started with a particular segment and he faced 2 to 3 consecutive losses, he used to change the segment. From stocks, he moved to derivatives. From derivatives, he moved to commodity in the currency. And this way, he was only changes the segment. He thought that perhaps that particular segment is not good for him. However, what he should have actually done is, as we have discussed on first slide, that he should have first focused on his mindset, his thought process, that if, or he should have also checked his strategies at least, that if there is anything wrong with my strategy. But he never did that, and that became his, the first problem. The second problem, now since he was not able to make any good profit in segments, so he was changing segment. And why he was not able to make profit, one reason was because he was having a not very less but okay amount to do trading or investment. Now with a very small margin, on okay margin, he cannot make very good profit. And if he faced 2 to 3 losses somewhere, in a way he was not making anything. So he started using broker's limit, and through broker's limit, in spite of making good profit, he got into a habit of over trading. And that over trading resulted in a big bad way into his life, that in 4 years he actually lost 12 lakh rupees. In a way I can say that he almost lost entire capital of his portfolio, because few amounts which he borrowed from his broker, that also became the reason of his being into debt. Anyway, what happened next? So first of all, let us understand the, oh, how over trading became one of the biggest factor of his doomsday in stock market. So what was his objective behind over trading? That he wanted to make more profit, and he was looking for instant profit as well, of course, because he thought that if I have more amount, I can do more number of trade, and that will help me to generate more profit or frequent profit. However, what happened to him, this was the result. So he actually got into losses which was bigger than his capacity. I told you, it was not only his portfolio loss. He was in debt because he has used broker's limit, and he met through losses. I mean, you can just imagine losing 12 lakh for an Indian farmer. It's a big deal. It's a big amount, even for any middle class who is also making a good money as of now. But 12 lakh is a big amount. And that was all because of over trading. Any person here who thinks that even he became he got involved into over trading and that became the reason of his doomsday in the stock market? I'm pretty much sure there would be few. Look, okay. So he says, I used to do. I understand. I understand. Okay. One person says that, yeah, I want to stop it, but I generally I don't understand, since fund is not available with me, so I'm losing, and yeah, and I'm in the same condition. Yeah, that is the reality. But now after he has taken care of his issues, what is his condition as of today? So he first learned how to cut his losses short, or how to book his losses. And that also helped him to hold his profitable positions. He overcome his mental accounting. So these, both of these two points are quite related. So what used to happen with him when he got into profit, he used to be very happy. But whenever he used to see losses, and then if suddenly he comes into profit, that used to make him fearful about again getting into losses. And that's the reason he used to book his losses, very short profits, in fact, very short profits, very small profits, in fact. And that was happening because of mental accounting. I will touch this topic of mental accounting later in detail. However, here I will move to the next point. And the biggest advantage which he is using as of today is broker's limit in a positive way. Yes. So if few people who heard this term for the first time, or this concept, in fact, that using broker's limit in positive way, so of course you get another sentence in your mind, another concept in mind. Okay, so broker's limit can be used either in positive way or negative way. Yes. And most of those people who do over trading, what they are doing is they are using broker's limit as an, I mean, in negative way. So this poor fellow now use it in a positively way. So how it actually happens? And let me tell you today, this is the most interesting topic which we are going to discuss here in this webinar. And I am damn sure that if you learn it correctly, don't worry if you don't do it here, we are there. You can talk to us later and you can get the clarity about this concept. But try to understand it here. And if you understand it here and if you execute it properly the way it has explained to you here, you can change your financial future big way. You can change your profit margin in a big way without taking much stress and with a small amount. So what I'm going to teach you here now is making big profit with small risk, and that would be done when you do when you use broker's limit in positive way, which is also said pyramiding. Why it's say pyramiding, that you will understand later. So what I'm going to do here is I would be shuffling these two slides frequently to make you understand about pyramiding. Let's say, let's see here, it says pyramiding positions, and I will make you understand what pyramiding is. Before I start explaining, I want all of you to please focus here without getting disturbed with any questions. Don't divert your mind with any other questions, because I've told you this can be a big game changer of your trading investment life in a stock market. So please pay attention. If you want, you can have a pen and paper and you can write whatever points you like to make a good note of this. Also, this is a very beautiful concept. Okay, so let's move ahead. This is a chart of TVS Motor stock futures. One lot of a stock future of TVS Motor consists of 2000 quantity. If you want to understand this chart duration, this chart starts from May 2016 and it goes to October. Okay, so the last date, this chart was taken on 25th October 2016, just 3 days before. Okay, now let's focus here in the month of August. Just in the first week of August, if you go above, where you can see number 1 written and a small circle, you can see a line here, a black line. In fact, it's a dark blue line. And here from where the breakout of this chart takes place. And on the first point, what we do, we make our first entry at 302 point with a stop loss of 295. If you can see, let's say, see here, this is the stop loss of 295. Okay, so we make 295 stop loss. So in a case, if our stop loss gets triggered here, what could have happened, that we could lose 14,000 rupees. So that was the maximum loss when we make an entry with 302 point with a stop loss of 295, because 392 minus 295 7 point, and 7 into 2000 quantity. I told you 2000 quantity in one lot. So 7 into 2000 means 14,000 of loss. Now this, if you I will go to the chart. If you see, this chart comes below, however again it moves up. So we wait for it to go up again, and again we make an entry, another entry at 310 point with a stall of loss of 298 with one more lot. So now the total quantity becomes 4,000 with us. Now let's see, if the stop loss here gets hit, then what could have happened with us? 298 stop loss, it means the entry price is 302. So on this lot, we lose 4.302 minus 298, 4 into 2000, 8,000 rupees of loss. And on the first lot, how much we lose? 24,000. How come? So we lose 12 rupees because 310 point is there, and 12 into 2, 24 plus 8, total we are losing 32,000. And why we have marked it with red, that I will tell you later. But in case if you book profit of 310 point, then what happens? What happens that this is a difference of 8 point. Of profit 8, it comes down and it goes up. So we make entry with 325 point with a stop loss of 315. Now here even the stop loss gets hit, because both the entry of both the above lots have been made before 315. So we will be overall making a profit of 16,000. How come? Let's check that. So let's say stop loss gets hit. So on this lot, we will make a lot of 10 point on per quantity, 2,000 into 10. That will loss of 20,000. On these lots, here we will make a profit of 5 point. Here we will make a profit of 13 points. So 13 into 2, 26. 5 into 2, 10. So 26 plus 10, this is our profit. And loss is 20,000. So 26 plus 10 is 36, and loss of 20,000. So overall we comes into profit. If stop loss does not get triggered, and if we exit from the market, book our profit on 325, then profit becomes 76,000. You want to understand? Let me tell you how. So on first lot, the entry was on 302 points, so 23 point of difference. So 23 into 2,000, 46,000. And on the second lot, this is the difference of 15 point, and 15 into 2, 30,000. So 46 plus 30 makes 76,000. Again, let's go to the chart. You see from here, chart is going up, and we make another position at 300. We 331 with a stop loss, and we make position with 348 point with two lot. Now since because now I know that even if I make entry, I'm not going to make any losses, because the maximum loss is 32,000. Now you can see both of the places we are making profit. So I know that now I have more confidence, because no losses. I'm in fact reducing my risk, so I can move confidently, and that's the reason I make now entry with two lots. So if you calculate the, even if stop loss gets triggered here 331, the total profit which we will make is 44,000. But in case if this stop loss does not get triggered, then the total profit we will make is 2,14,000. Similarly, next time whenever we make entry with 365 point with a stop loss of 345 point, again now we can make entry with two lot. And if you see, if this stop loss gets triggered 345, we will make a profit of 1,04,000. However, if this does not, and we come out with 365 at 365 point, we make 3,84,000. Similarly, at 407, if you see, as I told you, on 25th October, the profit was 407 point. So if you can see here, we make a total profit of 9,72,000 on this point, when if we put stop loss of 389. So can you see, this is called pyramiding. What exactly we are doing here? The more the chart is going up, we are making more and more entry, and this is called again profit averaging. So generally what most of you do, that when the chart goes down, then you make entry. We recommend no loss averaging at all. Never do loss averaging. I will discuss this point later more. However, we believe in profit averaging. And if you actually do through pyramiding, trust me, it can make wonder for you. This better. So let me make you understand here. The maximum risk here was 32,000 only. However, you can make a profit of 9,70,000, and this was, if on 27th, if we have, we could have booked, or we could have made entry with more lot, and or we could have booked our profit of 418 again. That could have increased our profit. So this is the beauty of pyramiding. Let's consider it here itself. Can you see the risk amount is only 32,000 and the profit is 9,72,000. If you try to see the risk to reward ratio, that becomes 1:30. And that's the beauty of pyramiding. That's the reason I told you in the beginning that it's a beautiful concept where you can make huge profit with a very less amount of risk. It's not a magic at all. It's a simple concept of pyramiding which can help you to make huge profit in your account. However, it works with very less number of people. Now, why? Let us see. To make that understand, I have taken this tweet from Mr. Manoj Nagpal, who has updated about, who had updated about, in fact, on 25th October itself, that is SDFC Prudence Fund. So what he has updated, let me show you another slide also. So this fund started on Feb 1st, 1994, 22 and a half years before. Again, go to the first slide. What he is writing here, that 2,200 investors have stayed invested with SDFC Prudence Fund since inception till date. Okay. So inception till date, I mean, after 22 and a half years, only 2,200 investors have actually created this wealth here. Because if you see the actual investment in the beginning was 10,000 rupees, and then 10,000 has become a huge amount of 4,98,000. 8,000, it looks a small amount or an okay amount, but check with the compare with 10,000. 10,000 becoming 5 lakh. So CAGR of 19.05%. That's a very good CAGR, because if you know Warren Buffett CAGR is also a 19+% only. So it's a very good CAGR, but how many people could actually create this wealth? Only 2,200. Rest of all left, because in between this fund must have given quite losses also. So what happens generally with retail trader, when they see bull market, they all move to stock market, but the moment they see bear market, they just go out of the market. They don't want to be in the market, and that becomes the main reason why they don't create wealth. They just make small profit. That becomes the main reason, and this is what I have explained you through this this tweet, and this chart. Try to understand what is happening wrong with these people. So why pyramiding does not happen with everyone? Because of these reasons. We will know the roadblocks of pyramiding. And the first is this. Generally what people do, so let's say you are doing 10 trades in entire year, and out of those trends hardly one or two is script will only help you to do pyramiding. Not all the script will help you to do those pyramiding, but how you will select those two scripts, nobody knows. And what scripts going to be helping you with the pyramiding, nobody knows. Even you cannot know that. So to get into those two scripts, you have to do all the 10 scripts. You cannot just try to outsmart the market and you will say that no, I will only do those two scripts where I can make pyramiding. No, that's not possible. Do all the trade. Second is mental accounting. I had talked about it when I was telling you the story of Mr. ABC. So let's understand mental accounting in detail. So what happens with normal retail traders? Let's talk about the example first. Let's say a trader makes entry into a stock with a price of 100 rupees. Now the market goes up, that stock goes up, and the price reaches to 120. You feel good. The trader feels good. Wow. And how trader calculates that he has made a profit of, let's say, consider the amount of stock as 1000, quantity 1000. So he assumed that now I'm into a profit of 20,000 rupees. Now the stock comes down at 110. So how he is calculating now that, oh, I lost 10 into 1000, that is 10,000 rupees. Why? Because now, according to him, the actual price of his stocks has become 1,20,000, as he has 120 price and 1,000 shares. And at current, because the stock price has come to 110, so he is the price as of now is only 1,10,000. So he feels that I'm losing 10,000 rupees. However, actually he has not booked the profit. And second point is, he is sitting still holding with a profit of 10,000 rupees. Actually his actual price was only 1 lakh. So this is benefit. He is still with a profit of 10,000 rupees, but he is not considering that loss, that profit. He's only focused about his losses. And that is the mental accounting most of the people do. You should never do that, because that becomes the main issue. Now, what is the problem with mental accounting is, so the moment this stock will come back to 120, this trader will not give a second thought before booking the profit at 120, and he will only book a 20,000 rupees on this stock. That is a very small profit. So if you do mental accounting, you cannot book bigger profits. So somewhere you have to hold. That is the problem with the mental accounting. That's the reason you should not do mental accounting, because you won't be able to book bigger profits. You will always come out with the small profits. And since most of the trader, they don't put stop loss, so they would be booking bigger losses. Now you think yourself, if you're making bigger losses and a small profit, how can you be in profit? That's not possible. So stop mental accounting. That's not going to help you at all. Now, on last slide, I explained you that the person moves to 20 point profit, 20 rupees profit on per stock, and then 10 rupees comes down. He's not losing at all. But generally what happens with a trader, that when a person is making 20 rupees of profit, he becomes happy for sure. However, when he's making a loss of 20 rupees, he feels bad, and very bad. Even if I take the last example where he was making profit of 20 rupees and he thought that he's making a loss of 10,000 when the stock came at 110, though he was not. So the pain of losing 10 rupees per stock was quite bigger than the pleasure of making 20 rupees per stock. And that becomes the reason because of which people don't want to lose, because the pain is too big for them. And this is the reason why people becomes loss averse. Don't be loss averse, because you cannot ignore losses. Losses are the part of every business you do anywhere in the world, so you cannot avoid it. And since you're becoming loss averse, you don't want to book your losses, and that's the only reason why you are making huge losses. Because look, losses are part of any business, and losses happens even to the leaders of those particular field. Any business I am taking, you take the leader of that particular business, even he makes losses. So he is also making losses, you are also making losses, but he is getting bigger and bigger every day, and you are losing your money every day. Why is it happening? Because you are becoming loss averse, and you don't want to book losses, and that's the reason you book actually bigger losses. And he is prepared to book losses, that's the reason he book small losses and make big profit. So somewhere you have to come out of this mindset. If you're making profit of 20 rupees, and if you're becoming happy, the similar kind of pain you should feel when you're losing 20 rupees. If you start taking losses in a big way, bad way, in fact, in worse way, in fact, and if you're taking profit only in good way, no, that's not going to work. That will not help you to improve as a mature trader who accept losses. So try to accept losses. That's the only way to become a person with huge wealth. And a very important point, how beautifully it is explained here, that good things take time. So you have to be patient. Anywhere in any walk of life, if you want good things, you have to be patient. You have to take time. Until unless you take time, you become patient, good things cannot be made. And you want good things, you want wealth, you want to achieve your dream, you want to have a good celebration for your daughter's wedding, or you want to buy a car, you want to send your children to good education. So these are good things of your life, and for that you have to be patient. That those are going to take time. So don't try to trade your time for money. Don't do that. And a very important concept, that you should work with stop loss. You should not make huge losses. On last slide, when I was talking about loss averse, and I told you accept losses. However, sometime before I told you that don't do loss averaging. So what I'm trying to tell you, that accept losses, but don't do bigger losses. Do calculated risk. If you don't plan your losses, if you don't accept the losses, then only you do bigger losses. Why bigger losses should not be done? Why you should do risk management always? Let me explain you through this table. So focus all of you through this table, and this is a very important concept again. Very important. Most of the people don't understand this point, and that's the reason even if they try hard, they don't make bigger profit. Most of their amount into losses most of the time. So here we are showing at the left of the table loss incurred on your particular amount, and then returns required to reach to that original amount. So let me talk through an example. Let's say you have 100 rupees and you make a loss of 2%. It means you have lost 2 rupees. Your amount becomes 98 rupees. Now what you want first, any trader who makes losses, first he wants to achieve his original portfolio amount. So of course you will be looking for a profit where you can again, make your portfolio amount 100 rupees back to the original amount of 100 rupees, in fact. So 2 rupees of profit now has to be generated on 98 rupees of investment, and 2 rupees of 98 rupees becomes 2.04%, not 2%. Understand? Let me take the second row now. So let's say you lost 10% of 100 rupees. It means you lost 10 rupees. The amount with you now after loss becomes 90 rupees. Now, if you want to reach to your original amount of 100 rupees, you have to make a gain of 10 rupees. However, 10 rupees of 90 rupees of investment, which is available with you now in portfolio, is 11.11%. So you are not making a profit now to 10% to reach to original amount. Actually you will be required to make a profit of 11.11%. So again, for 20 loss of 25%, you have to make a gain of 33.33%. So this margin of profit after making loss keeps growing up. Now you see, for 50%, you are making 100%. How come? So this time again, let me take an example. And this time I will not take 100 rupees. Let me take 600 rupees. So for 600 rupees, if you lose 50% of 600, it means 300 rupees gone. Now you are left with only 300 rupees. Now to reach your original amount of 600 rupees, you have to make a gain of 300 rupees on an investment of 300 rupees, and that is 100% of profit. Now you think, do you think that it takes the similar amount of effort to lose 50% and to gain 100%? No. Within one or two trade, you can easily lose 50% of your capital, but within one or two trade, it is very hardly possible that you can make 100% of gain. It's very tough. And if you see the last row, oh my God, if you lose 75% of fund, then to regain your original amount, it requires 300% of return. Why not we do again it on a 600? So let's say you lose 75% of 600 rupees. 7500 of 600 rupees makes 450 rupees. So you have lost 450. You are only left with 150 rupees. Now, to reach to original amount 600 rupees from 150, you actually require a return of 300% on 150 rupees of investment. So that is why you should always do risk management. That is the reason we are telling you again and again that take losses, accept losses, but only calculated risk. No blind risk. Don't lose much. Lose as small as possible for you. Take a risk, I mean, do risk management only 2%, 3%. Then return getting at the original amount will be an easy task for you. And once you get the original, only then you can think about the profit. Because generally, when you lose your amount, you stop thinking about profit. Though you think, but in your mind, you actually want to at least reach to the same level from where you started. So please understand, don't ignore risk management. This is a very beautiful concept. Now, a lot of you must be thinking how to do it actually in practical ways. So let me show you that as well. So here is a trader with blue suit sitting. He receives a trade. So generally a trader, what a trader does, that the moment he receives trade, he start thinking here, how much profit should I make? However, what we suggest you to do is first think about your risk. How much risk I would be taking on this? So here the trader decides that, okay, from total capital, the person will invest only 20%. Now, why the trader has decided to invest only 20%, that will be explained from here. So his capital amount is 1 lakh rupees, and he has decided that he want to take a risk of 2%. So 2% of 1 lakh rupees would be 2000 rupees, right? The stock price is 100. So what he does, actually, he buys 200 quantity. For 200 quantities, he pays only 20,000 rupees. Now he puts a stop loss of 90 rupees. So he is taking a risk of only 10 rupees on per stock. Now stock quantity is 200. So 210, only 2000 of risk. So your risk will decide how many quantity you have to buy, not your capital should decide, or not the stock price should decide how many quantity you will go for in a particular script. So first you have to think about your risk, and from risk you will decide how much capital you will be putting into that stock. Okay, that's clear to you? Good. Okay, so this is how you can do proper risk management. And if you do proper risk management, if you don't become a loss averse person, if you have patience, and if you don't do mental accounting, and also you don't try to outsmart market, trust me, pyramiding is possible in your life. Apart from this, I also want you to remind one point which I always keep saying, that apart from pyramiding, I told you pyramiding is beautiful. Can I get some quick feedback from all those people who liked pyramiding? Wow. Almost everyone's saying, wow, this is beautiful. Okay, I know you are asking so many questions about pyramiding. And as I told in the beginning, you might have many doubts. Please hold your questions for the end of the webinar. I will answer all your questions. Not I, in fact, I will ask one of the most successful trader and our founder, Mr. Pratik Patel, to answer your questions. So you can get the real answer from a real trader. But hold your questions. So first, let's talk about compounding. So let me show you the chart of Mr. Warren Buffett, and then I think you will understand how compounding has created a huge difference in Warren Buffett's financial life, and he became one of the wealthiest person on this planet. So if you see, here we can see the chart when Warren Buffett was 14 years old. He was having a portfolio of $5,000, at 15 $6,000, at 19 $10,000, and 21 $20,000. And let us move ahead and let's come here. So in 39 years, in fact, if I also include 53, it actually becomes 40 years. So in 40 years, $5,000 become $620 million. $620 million is definitely a very good amount. But you see, if you try to see through the chart, it looks an okay growth in the portfolio. But if you see from 53 to 83, within 30 years, his amount shoots and it becomes $58 billion. Wow, such a huge amount made him one of the wealthiest person on this planet. Even German scientist Albert Einstein has said that compound interest is the eighth wonder of the world. And you can see the wonder happening in Warren Buffett's life and his portfolio. So why don't you use the same wonder in your life? And sometimes people think, oh my God, compounding takes time. Yes, I told you, good things take time. So you cannot ignore this fact. But the day you achieve to do it, how things will change, how wonderful things will be coming in your life, you cannot even imagine at this moment. Trust me, when Warren Buffett was just 14 years old or even 30 years old, he never knew that he would be able to make a fortune of $58 billion or more than that. But compounding made him such a big, or in fact, a legend of this industry, a legend on this planet, in fact. Now you must be thinking, does compounding actually help a retail trader, a normal person? Of course, let me show you. In Nifty Millionaire, we encourage compounding every day to everyone. Everyone should do compounding. We always tell that we have huge number of content on YouTube and on our blog where we talk about compounding. And see here, Nifty Millionaire started in 2013, April, and a person who makes entry with Nifty Millionaire with an initial investment of 1 lakh rupees, in 3.5 years, as of today, his 1 lakh rupees has turned into 3,10,500 rupees. Now, if you see, the capital has grown 3 times, more than 200% of profit in 3.5 years. Wow. If I try to find out the CAGR, that is 50+% in 3.5 years. That's the magic of compounding. And trust me, in this growth, in this growth of chart, we have not done any magic at all. This is simple mathematics of wealth creation. What is compounding? Compounding means where your money will make more money for you. In trading terms, where your profit will generate more profit for you. And that's the only way you can create wealth in your life. Cool. So you have to do compounding. When you can pay compounded interest to bank to make your house, why can't you make the same kind of compounding in your life? You just think, the price of your house becomes so huge, and you pay such a huge amount to bank in 20 years, or nowadays they are also offering you for loan for 30 years, and the loan is somewhere on average 10%. In stock market, 15 to 22, in fact 25% of CAGR is possible in long term. You just saw in HDFC Prudence Fund also that in 20 years the CAGR was 19%. And in stock, if you entering directly, here you can make an average CAGR of 25% in 20 years. So how magnificently that can change your portfolio. But that will happen with time. It will take time. If you're not able to do it for 20, at least do it for 5 years, 10 years. And trust me, once you do for 5 years and 10 years, I'm pretty much sure you will get motivated to do it for 20 years. So don't get fearful, don't get dreaded because thinking about 20 years, how I will do till 20 years. Don't do this. Take uh, take an aim of 5 years, 7 years, 10 years, and then extend your timing. But do compounding. Both of these concepts, pyramiding and compounding, these two sharing of our knowledge today, if you learn and if you do it in your life, trust me, everything, I mean, all those goals which we had talked, which sometimes did not look real to you using your own money, will start looking feasible for you use through your own investment and wealth creation. So both are very beautiful concept, pyramiding and compounding. Please do both of these activities in your trading life. And if you do both, trust me, life will change. So people, again, I will tell you, do pyramiding for sure. Pyramiding is a beautiful concept and compounding is a beautiful concept. It will not happen every day, but at least pyramiding can happen once or twice in a year, and then it will change your portfolio amount unimaginably in few years. But that will only happen when you will focus that you are not becoming loss averse, you're not doing mental accounting, you are having patience, and you are doing proper risk management, and you are not trying to outsmart the market. And I'm pretty much sure you can do this because pyramiding is possible for only those who don't do these things which I just mentioned about. So now if you are not able to do pyramiding, it's you who is the responsible. It's not anything else. So as, and I will tell you again, in case if you're facing any trouble following pyramiding or compounding in your life, don't just keep sitting and thinking, oh my god, how will I do, why it's not happening with me, oh my god, what is happening. Instead, our number is 0223098789. If this number is also there on our website, please dial this number and ask us that why it's not happening in my life. Let me tell you, a lot of people used to call us and they used to ask, even today also few people call and ask us, why it happens with me that the moment I exit from that particular script, the script goes up. And our answer used to be mental accounting. I told you, a lot of people do small profit booking. It's just because mental accounting. And when they understood, oh, mental accounting, yes, and you have to work on your mental accounting. I can just explain you that what is the losses of mental accounting. I cannot actually make it happen in your life. So people, please do it in your life. And if you do this life, of course your financial future will change. I have a full faith in these concepts. We do compounding, we do pyramiding here in Nifty Millionaire on our profiles, and that's the reason we have seen the outcome of these activities happening. As I explained you, this TVS motor chart is not an old chart. This is a current chart. In fact, you can see that was the last date when we updated was 25th October, 3 days before. So these things will definitely change your entire portfolio, entire life. Now the question answer session. And as I had told you, as I promised you, instead of me answering all your questions, I will invite our founder, a successful trader, Mr. Pratik Patel, to answer all your queries so that he can answer all your queries beautifully and you can learn more from him being here. So here comes Mr. Pratik Patel. Welcome, sir. And people, thank you so much for your wonderful time here. Before I hand over this mic to Mr. Pratik Patel, thank you so much for inspiring me in 2016. But please, people, just one small request that please be disciplined and do pyramiding and compounding. Trust me, just do it for a couple of years and you will see how things will change in your life. So here comes Mr. Pratik Patel to answer all your questions. Please start shooting your questions. Thank you.